Okay, so spread betting, such an easy way to trade. You haven't got to work out lots like you would for a traditional broker. It's so simple, and I'm going to explain the basics to you. Okay, so here's the chart of the pound US. So we're looking at the pound against the US dollar, okay? And these charts are available within your spread betting company brokerage. They'll provide these charts for you. And this is just a simple chart. It's got a couple of moving averages on it, but don't worry about that. So here we're looking at, say, pound going down. You see the pound's going down against US dollar. Now to trade it, all we do is we can trade directly off the chart here. So here I'd be looking at a sell. This is on a 4-hourly chart. So all I do is I just click on the sell button, okay, and the price we're looking at here, so you're looking at the highlighted numbers at the end here. It's 12,451, okay, that's the sell price. The buy price is 12,452.9. This figure in the middle here is the spread, so it's a 1.5 spread. So the spread is basically an operating cost. Think of it as like a commission, okay, that you have to pay when you trade. Now what you do here is we're actually looking at, instead of going into lots, it's going to be on per point, okay, so it's pound per point. So for example, if I click on this arrow here, now this is really good because if you've got a small account, for example, you can start at 50p a point. This is here in the UK, so 50p a point, okay, which is very low. Now, I'd always advise to put a stop in. You don't have to, but when you're starting out, put a stop in. Now, it says here, a minimum stop of 4 points away. Well, from experience, that is the bare minimum, and that's easily going to, especially if you're day trading, that's easily going to be stopped out. So you'd put more than that, I don't know, maybe 50 points, whatever. Okay, let's put 100. So we just a nice round figure of 100 points, okay? And we'll just for now, to make it easy, we'll put it at £1 a point, okay? Now, the important figure here to look at is the margin. So you have to have £414.66 in your account, okay? So that is to cover the trade that you're going to trade, okay? Now we've got the stop here. So if we go back to the chart here, this middle line here is where we start the trade at. Remember, we're going short, so we're looking for the price to come down here, okay? So now if the price was to go back up here, the stop up here, you see on the left here, it says you're going to lose, in the red here, £100. Because remember, we're betting £1 a point, 100 points, so 1 times 100, you lose £100, okay? But what I've done is you can also set a limit. Now, a limit is the profit you're willing to take. So if I think the price is going to come down here, for example, to the 200 points away, then 200 points, times £1 gives you this figure here in the blue, £200, and it works out the risk reward ratio for you. So as it says here in the middle, it says your risk reward ratio is 1 to 2. In other words, you're betting that it's going to go 100 points away, okay? So your stop is 100 points away. That's the worst case scenario, okay? But you're also betting as well that it's going to come down here on the limit. In other words, your stop there is to protect you. So if it goes down, you're going to lose £100, but you could gain, if you look at the limit here, you could gain £200, 200 points, so double the amount. So that's called a 1 to 2 ratio. Now you could do, for example, let's see, you could do, if I put that to 100 for the limit, okay, so 100, risking 100 points or £100, remember £1 a point, that's a risk reward ratio 1 to 1. But technically you're going to lose more times than you're going to win. So ideally you want it at least, for example, should we go to 1.5? So that's 150. Okay, 150 points is our limit, and we're still risking 100 up here at the stop. You can do it the other way around as well. For example, if we buy, now this becomes a limit here, because remember we're wanting the price to go back up. So the stop here is 100 points, and we're hoping to gain 150 points. So basically the system will close you out. They'll close you out automatically if it hits a stop 100 points, £100. It also close you out the limit if it gets to their 150 points. So if it closes you out, you lose 100 points, okay, £100. then £100 will come out of your account, and this margin that you used to cover it will go back into your account. So for example, if I'm currently trading this and I've got a £500 in my account, okay, that only leaves me approximately £85 left for another trade. Okay, bear in mind you'll also have to put a margin up for that as well. But once this trade closes off, that margin becomes available. I either lose the 150 I either lose £100 or I win £150, and then that goes back into and that money there, margin, becomes available once again. Okay, so it's very straightforward, and you just press the place the deal button, and that's how it works. So if you click on the order here, that brings up your order status of how you want to place your order. You can have alerts. You've got info here about minimum dealing size, the margin factor, 3.33%, minimum guaranteed stop distance, so slippage factor. So slippage factor, for example, they might not be able to close you out directly on your particular stop in a fast moving market like the pound US. So you might be a slipper, a pip or a point you might lose out on. It doesn't happen that often, but it's just, it's just the risk you take. So I say pips, that's pips when we're working in forex, but points in any other thing that we're trading. And the good thing about these spread betting companies, they allow you to trade on a variety of different financial instruments. So for example, I'm going to bring up, for example, I'm here in the UK, the FTSE 100. Now this has got a stop and a limit in, a very narrow one, and I've got £3 per point. But if I do 200, so spread that out a bit. So that's on a sell at the moment. So we're looking for it to come down here, a limit of 200, and I haven't put a stop in, so I'll put a stop in, for example, of 100. So risking 100, ratio of 1 to 2. So starting off here, looking for it to come down here, £3 a point, 3 times 200, that'd be £600, or you could lose £300 up here. But yet again, you can start off, I mean, for example, if it's £3 per point on that one, then you need a big margin of £1,181.66 in your account. But for example, the good thing about these spread betting accounts, you can start off with 0.5, and then that way you only need £196.90, just under £200 in your account. But yeah, again, it's all about risk management. If I click on the buy, it works the other way around. That becomes your limit up there because we want the price to go, and that becomes your stop. And you're working on the last few digits. So, and that's only got a one point spread. So when you're working in things like the indices and that, you tend to call it points, but points or pips, it's just, for example, if that goes up, for example, if we're buying and it goes 7877.4, goes up 77. So 77.1, or obviously it keeps changing, this is live, but if, for example, if it goes up 7876.1, goes up 7877.1, then that'd be 1 point or 1 pip. And that's what you're working on. But let's have a look at some other trades that you can do. You can also trade on the Dow Jones. Now remember, when you're looking at these figures here, so 38,021, that is a large number. That's why they allow you to trade such a small per point, 0.2, that's like 20p, and they got like 10 points away, but you're probably going to need a lot more than that. And also it depends whether you're going to be trading, for example, just 4 hourly. If you're trading the daily chart, stops will need to be bigger. I mean, you can trade without stops, but I wouldn't advise it. And if you're trading an hourly chart, stops will be tighter. But always looks to see how, and you can go by the candlesticks, how big a movement is. So for example, that's 38726.4, and that's gone all the way up to 38726, 274, nearly 300 points range on the Dow. So you've got to allow for that, and that's on the 1 hourly. So that's how many points it can move. So be wary of how many points the market can move, because you have to cover that, and you can easily get stopped out. Sometimes you can put your stops too closely, and what will happen is the price will move up, just about hit your stop and come back down again. So you have to be wary of that. But also, so that's the FTSE. You can also trade things like the gold price as well, and you trade things like ETS. I mean, there's so many different things you can trade, but that's what you have to be wary of, because it's so easy just to set a trade on like this. I mean, I can just click on there and instantly the trade's going to go through. For example, on gold, this is minimum £1 per point, and yet again I just click on the stop. They say points minimum 1 away. Well, gold doesn't move as much, but you might lead at £10 per point. So you always have to check, you know, what these candlesticks are, what the average daily or what the average movement in whatever time frame you're using. And then they've got the margin here of only £118, and you can take a limit on that as well. Get 15 points, and it again shows the risk reward up here. So it's all set out for you in that. And a lot of these companies as well will have a demo account, so you can use a demo account before you start. But obviously trading with a demo account's not the same as obviously having skin in the game. But then, as I say, then you can go to, for an example, something maybe where you can use just like 50p a point, maybe on the FTSE if you're here in the UK. I mean, the Dow, okay, you can do it, start off at 0.2 a point, but the Dow is a very big indice. So maybe something like the FTSE you could start off with, or start maybe on one of the forex pairs. Pound US is very popular, and you can start off with that. I think that was, what did we say? That was, yeah, that's 50p a point. So you could start off with something like that. Pound US is very popular. And here you can change, obviously, the times, the daily 4 hours. So you can change what time limit you're working on, which obviously change depending on what strategy you're going to use. So always have a trading plan. Don't just, because it's quite easy on these accounts just to click through and look at anything, and because you can trade so instantly, just click on it. But you know it's real money you're using, and you need to treat it as a business and have a proper trading plan, not let your emotions get in the way. But you know, you've got all the indicators here as well you can use on these charts before you trade. So all these indicators, just like any other brokerage company. As I say, the only difference is how you actually place your trade, and I find it a lot easier to understand. And I think it is when you're starting out, to understand. You clearly see how much you win, how much you lose, and you can instantly work out your risk and possible profits when you're doing pound per point. Another thing to look out for when you place your order, you will be depending whether you're going to day trade or keep it for over a day. So for example, there'll be things like spots. So a spot trade is basically for on the currencies, is for the same day trade. And then you also have future contracts. So if you're going to hold it for over a day, the spread is slightly more, but it might work out more profitable, because if you hold overnight on a spot trade, for example, on the forex, you might incur admin charges, interest charges. So beware of that. So always choose the right contract for you. But apart from that, it's pretty simple. Set how many points away you want to do, how many you want to do per pound per point, and then you can, you don't have to sit here watching it. You can go away happy on the fact that you've set your stop wide enough so you're not going to get stopped out too early. But your risk is set, so it's all about risk management, and I find this quite easy to understand, and I think for beginners as well. It's not, obviously make up your own mind as regards this. I mean, this is just another option for you, but obviously if you're here in the UK, then using a spread betting company can be worthwhile, but you do have to be obviously wary of the risks. I mean, it's trading. It is essentially trading. It's just a different way of trading and a different tool to use while trading. And here in the UK, it's quite a nice tool to have. And I think if you're just starting off, then trading pound per point where you can instantly trade. But as I said, the downfall is because it is so easy to trade like this, you could be trading on loads of different instruments and get carried away. And that's why in some ways this margin is good because you've got to have so much in your account. So if you're starting off small, that does help you to stop you from overtrading. But yeah, it is very, very simple. You've got limit up here, stop there. Very simple to understand. And it's a good way if you're new to trading, I think, to trade. So if you're in the UK and you can use a spread betting company, then it's another option you could think about using instead of going through the traditional broker. You could maybe think about setting up a spread bet account. It's fairly straightforward. You apply, and once you've been approved, then as I say, you've got your demo account. You've got these free charts as well that come with it. You deposit your amount of money. I think the minimum deposit is £250, and then instantly you can trade. As I say, just don't get carried away with it, but it is quite an efficient tool because you could get very good leverage on it, which means you can make very good profits, but at the same time you also have great big losses. That's why always put stops when you're first starting out. Know your risk, what your risk management is, and maybe put in limits as well. But make sure when you set your limits and that your risk reward is so when you do win, you win bigger than your losses, because it's all about risk management. You're not going to win all the time. It's all about the probabilities, and you want to make sure that your winnings are greater than your losses. So yeah, that's my take on spread betting. And it's just my opinion. It's up for you to make your own, but I think it is a good way to trade. I find it a good way to trade anyway, and I'll let you decide what you think. Okay, thank you very much.